Hey guys, All in Crypto here, and welcome back, ladies and gents, for another YouTube video. This is going to be our daily cryptocurrency market update. And we got some really interesting things to cover in this video. We're going to be looking at Bitcoin, looking at the structure that it's currently in, what I believe is going to play out. You guys know that ultimately I think this is a bear market and that trend is going to continue. I don't think we're out the woods yet. I would love nothing more than to flip bullish on the crypto space. I just don't think that the time is now for that. Things look bad, guys, across the board. That being said, this isn't going to be all doom and gloom. I do really believe in crypto over the long term. This was an interesting article saying 64% of US blockchain versed parents want crypto taught in school. So this seems a little bit far-fetched, but I really do believe that blockchain as a technology is going to be something that we are all going to use every day, just like we all use the internet, we all use a PC, we all probably drive a car. These are all tech revolutions moving into the future. I really do believe in blockchain as a technological revolution. And we'll sort of go over a few things like the fact that MakerDAO opens $100 million loan to Huntingdon Valley Bank. So we're actually continuing to see, and when we talk about DeFi, DeFi has really just been an arbitrage opportunity thus far. We've not actually, I would argue, seen any real adoption of DeFi. We're still so early and new as a space, we're really yet to see where it goes. But more and more, we're seeing the sort of traditional financial world merge over with our beloved crypto space and ecosystem. So let's start things off by talking about Bitcoin. We highlighted this kind of broadening, ascending wedge, you could call it, structure. And this is typically going to lead to downside. We've broken this sort of trend line that we were adhering to, and potentially we are looking at coming out and at least retesting some of the lows down here. Ultimately, I've got lower targets than 17K for Bitcoin, but let's just deal with the here and now. This is the structure I believe we're in. We highlighted this on yesterday's video. I also wrote a tweet on it. For anybody that's not following me on Twitter, it's well worth it, guys, because you get a lot more timely updates. Also, I do put out daily threads, multiple of them, on all the things happening within the crypto space. And we go into quite some detail. But this is essentially the structure that I believe you're in. And it's very natural to get a bounce here. This almost confirms this structure, the fact that we've bounced off this sort of ascending trend line, if you will, of this broadening structure. And the thing is, I'm hoping that these wicks aren't just the bounce. So I'm currently short right now. We've been short since this break. Yes, we've entered probably some late shorts, which has me a little bit nervy. But I think one thing to remember if you are trading the cryptocurrency market is do not use high leverage. It gives you a lot more leeway and you don't have to sweat over your liquidation price. I'm going to do a lot more series on trading crypto, on trading generally. I'm definitely not a pro trader. I've never once claimed to be. I'm definitely still an amateur. I would say I'm a decent trader. I'm a profitable trader. But trading is one of the most frustrating endeavors that I think anybody can embark on. Certainly when you first start, it's all about losing money, basically. That's how you get good at trading, essentially, which sounds very contradictory, but you learn a lot more from your mistakes and your winnings. The winnings that we had from this sort of drop haven't really learned a lot. It's more, when you get kind of caught out that you learn. But anyway, that's enough of that. So very natural that you get a bounce. So you can see you're very much bouncing off it. The problem that you've got is and a couple of scenarios here, right? This maybe could be the bounce. This could be the bounce off here. It's been very weak. That's a bearish signal if you then come and pop your head back below it. You're more than likely coming down to these levels here. In fact, it's pretty much a given. And look at where you wicked off of, because there you've got liquidity, right? So this is kind of the play that we're looking at. We're not looking for new highs. We're not looking to take these out. We'll know if that's the case. You'll come back up and reclaim this trend line, and then we'll look for the push to the upside. But for now, we're biased that the market still has more downside. Not looking for longs right now. And the fact, like I say, that you bounced off this really kind of validates this broadening structure that I believe we're in. And this potentially could be the bounce ready for that downside. Doesn't have to be. Scenario 2, other than just coming down and rolling here, is that you kind of form a little bit of a base here and you push up, maybe push back into some of these levels, let this EMA creep up, and then you sort of reject and we see that downside. it's kind of a hard trading market. I mean, look at what Bitcoin's been doing. It's pretty much just range bound. You know, and this is sort of your you know, these are where people are shorting, here's where people are longing. And this has kind of been what we've been doing now for how many days? 4 days. So you're going to get a break out of this. The question is which way. Either way is fine with me, because even if we do get that push to the upside, which we're totally cool and okay with, for me it's going to be a shorting opportunity. You know, rallies in a bear market for shorting. You've got to be very careful though, because, and even I get caught offside all the time with shorting. It's very often with the successful shorts that I have, I've maybe had 2, 3, sometimes even more attempts at shorting them prior to actually getting that big one that gets me in the money, basically. And as long as the ones that you get wrong, you know how to manage, you know how to, you know where to put your stops, or if it's a swing trade, you know, and you're using no leverage, then maybe you can let it ride. You'll be okay. But essentially, we're just range bound here, and we're looking for that break. And I think, you know, again, 2 scenarios is we come up, we just roll, come back below, and then we start the downside. Or you get that kind of push up using this as a kind of base, very natural to see. You know, this is how these structures kind of work. And then you get the rejection and then come to the downside. And there's a lot going on. There's an actual catalyst that I think could tip not just the stock market, but the cryptocurrency market to the downside. And that's going to be the Tesla stock split. We'll talk about this in just a second. So that's really wrapped up the technicals of what I'm looking at here. Nothing too fancy, not trying to day trade at the moment, really just trying to get my swings, and then I'll get back to day trading, you know, once we've seen that further capitulation move, and we're in a sort of range. But this also, again, with a bounce here, you've had a huge capitulation to the downside. Natural. For me, I reckon this is lots of longs getting out, basically, here. And maybe flipping short and maybe building those shorts up in here. But I think this has largely been caused by longs getting out. And for me, when I look around the overall macro environment, it's shit, guys. I don't want to... I'm saying this for a long time. You know, let's just take a look. The UK market is down today. The dollar is still gaining strength. We've spoken a lot about the dollar. You know, remember yesterday when the market kind of rallied, it was on a down day for the dollar. Dollar's finding its feet and is now going back up. This is not good for crypto. What have we got here? Yeah, there's lots going on anyway. You know, the Asian market hasn't opened too positively at all, and the dollar's gaining strength. So that leads me to believe that there's probably likely a bad day ahead for the cryptocurrency market. You know, every morning when I get up, I check all the markets. I look at the futures market. You know, your futures aren't really too down, but they're not up. We'll see what the kind of open brings. And that's really going to set the pace for the crypto market. It is indeed Ukrainian Independence Day today, the 31st year of independence. Could be a bit of a, you know, I was somewhat expecting maybe some sort of a kickback or maybe a geopolitical event here. Hasn't been the case so far, but it is certainly a day to be paying attention to things. That's for sure. This is from Jim Cramer. Jim Cramer says, tap the brakes on comparing this year's market to 2001 and 2008. Anything Jim Cramer says, guys, ignore. You know, we all get things wrong, but the thing is with CNBC, you are not their priority. Their shareholders are, and they will say whatever they need to say at whatever date, whatever they think is popular to get the views in. So always be, the tape tells all. That's a Stan Weinstein quote. It's well worth reading his book, actually, How to Make Money in a Bear and Bull Market. Certainly if you're a beginner. Talks about 4 stages of markets and the 30 can be day, weekly, or predominantly weekly moving average, which is something that I still use to this day. I haven't read that book a long time ago. But essentially, you know, this brings me on to the next thing. This is Bitcoin bulls may win big as 2 key moving averages cross. So we've had lots of bottoming indicators. This is from, not sure who this guy is. Big expansion on the Pi cycle top EMA. So the problem that you've got with all these EMAs and looking at things in historic context for Bitcoin has never been in this kind of a historic environment, okay? So since 2008, you can see that markets, and by the way, we were pointing this out before this broke, but don't want to blow my own trumpet too much. It's pretty obvious. Markets, this 2008, markets in 2008 have just gone up. Bitcoin's never had to deal with a recession, which I think we're in, and I think it's not even, I think it's begun, but I don't think it's really heated up that much, and we've seen it really get as nasty as it needs to. So the question you've got to ask is, we know how the stock market acts in a recession, an extremely overvalued stock market, by the way. How is Bitcoin going to act? And I believe, given the correlation that it has with the stock market currently, it's just going to follow suit. You know, this is Bitcoin back in 2008. It's been going up whilst markets have gone up. And the other thing is that's worth mentioning is, you know, we've had so many, bear with me, guys. We've had so many different indicators at this point, you know, whether it be the long-term regression bands. Let's see if we can pull something up here. You know, the long-term regression bands, whether it be the 200 weekly moving average that's historically hold, they've all failed. And the thing is, with this long-term regression band, look at what you're doing. Coming up, hitting your head, and rolling below it. Same with your 200 weekly moving average. So this is kind of the thing with all these bottoming indicators and these people calling for this and that. I mean, this one was interesting, the 50 and the 100 weekly moving average. You know, this crosses typically at the sort of low point of a downtrend, but you can still put in new lows, or low point of a bear market. It just doesn't, you know, I don't trust these historical indicators, given the fact that Bitcoin's history is so small and never had to be in an environment where liquidity is getting taken out. Markets are just moved by money. It's not just the consumer with all these high energy prices, you know, this kind of energy crisis that's going on. It's also from a sort of institutional and bank level that money is becoming scarce. That's not going to find its way into markets, whereas March 2020 onwards was really the opposite of that. So we're in an opposite sort of environment to that. Expect a inverse correlation with what happened from March 2020 onwards. That's plain and simply it, guys. Let's talk about the Tesla stock split. Is tomorrow. On the last split, Tesla dumped over 33% right after the split. So the split hasn't actually occurred. It will start trading split adjustment Thursday, which is the 25th. The day of the last split, Tesla went up 12.57 before it dumped over 33%. So maybe you get a little bid here. Maybe you get a little bid here going into the split. When's the actual last date? So I think the 31st is the actual split date. So it's the 25th today. So going into next week, and then maybe it dumps off the back end of that. But Tesla going up would probably actually be quite good for the stock market. It would certainly give it a little boost. That's kind of what it needs. But then if Tesla dumps hard, the rest of the market go with it. We know that Bitcoin right now, it's kind of like gets to 230 in the UK. Right, let's see what the stock market's doing. Let's not even look at the crypto charts. Let's just look at the S&P and the NASDAQ and move forwards. So yeah, so my bias is still downside. Let's get on to a little bit of bullish news. Italian bonds. So this is bad, right? This is really bad. Because we're seeing so many things happen that just haven't happened since 2008, bringing up Jim Cramer again, 2001. So there's lots of comparables there in regards to the environment. But we're also seeing things that are just completely out there, you know, and it kind of worries me. I think the Fed is going to pivot, not because they've accomplished their goal of taming inflation. I think inflation is going to stay persistently high. Talking about inflation, let's take a look at natural gas. Where are we? Look at this bad boy. Yeah. We've got targets actually for natural gas at around about $14. Steaming ahead. Oil, I think, is going to turn as well. And the dollar's rocketing. So this is what I mean. It's just not a great environment. On some bullish news, this is 74% of US blockchain versus parents want crypto to school. So I believe it will be eventually, or they'll teach the kind of basic principles of it, just as part of the curriculum. I mean, they teach unbelievably stupid stuff in school now. I think the educational system is absolutely flawed. I don't think it benefit. Got to be careful what I say here. I think there's lots of negatives to it. Certainly when you take a human being as a human being, an individual that, you know, has their own, you know, just to tarnish everyone with one brush, make them sit in a classroom and expect, you know, them to continue to do that for the rest of their life, I don't think is really the best approach. But anyway, this is interesting, you know, this is all tying in with my thesis that I believe that blockchain is a real tech revolution. Crypto Prime brokerage enlists former Wells Fargo, JP Morgan exec. One thing that you're continuing to see is the likes of your sort of big traditional finance players moving over to the crypto space. The biggest, in fact, all setting up for crypto to get to, you know, multiple trillions in terms of an asset class. I think we'll get to 10, 20, 30, 40, you know, $50 trillion in terms of a market cap. And, you know, we're kind of gearing up for that. This is another interesting one before I love and leave you. MakerDAO opens $100 million a DAI loan to Huntington Valley Bank. The MakerDAO loan to Huntington Bank Valley marks the first integration between decentralized finance and traditional banks. More of this to come, and we're going to be covering a lot of DeFi protocols that we're extremely bullish on into the future. But, you know, we're really just focusing on the macro right now, focusing on where I think we're going, and then we'll deal with everything after that. So that's all I've got for you in this video, guys. If you've enjoyed the content, like as always, appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Go over and give my Twitter a follow. And also, there's a link to it in the description. And also, for anybody interested in my Patreon, please go and check that out. No pressure to join whatsoever. We want people that want to join. We're really focused on, you know, making the most out of the cryptocurrency market and picking those, you know, real gems of altcoins, and also, you know, when we get back into markets and everything associated with that. All I've got for you in this video, guys. If you enjoyed the content, like, so appreciate it. So as a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching, guys.